Alan Greenspan, guys. Look at that.
U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue
now
of
listen.
Credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
There is zero probability of default, guys. You cannot make this up. So today we want to show you an exclusive chart which exactly lays down, no financial advice, why Bitcoin is set up to explode. So if you are excited already, make sure you smash up the like button. And that being said, guys, welcome crypto friends and welcome back to MMCrypto. My name is Chris, and as always, we want to get straight into the content. Before we show you that exclusive chart which shows you exactly why, in our opinion, Bitcoin is set up to explode, we want to thank our sponsors just for a few seconds. Folex.io, some of you guys might already know them, and the reason why we are doing that right now is because they have opened their first pool for masternodes, Dash, Pivx. Many of you guys cannot afford masternodes like Dash or Pivx. So if you want to like diversify your risk, it's still very risky. You can invest in those kind of pools right here. So thank you so much for sponsoring us, guys. Always read the risk disclosure, the disclaimer, and invest at your own risk, guys, obviously. But the link is given down in the description down below. So thank you so much for sponsoring us. And that being said, we want to get straight into the content. This chart here, actually, this is not the chart we want to show you, but this is the introduction for the chart we want to show you. And this chart here, we have shown it in one of the last episodes already. It shows the M3, the monetary supply, the circulating supply of the United States notes, the US dollar actually. And as you can see, it's increasing and increasing because of that quantitative easing. We have shown you right here what Alan Greenspan has to say about that, and he is saying there is no default risk because they can take any kind of debt and just print more money. But just think about what that means, because if you have a set number of given assets which you cannot inflate artificially like real estate or so, and then on the same time you have quantitative easing and really excessive printing of money like it is right here, what's happening? What is happening if you have that? And before we go into that exclusive chart which exactly lays you down why Bitcoin is set up to explode, we want to show you something which is really horrifying. Some people might laugh, but it's not really funny, it's more horrifying, but it's very educational and it's very important. Always keep in mind the danger not only of inflation but of hyperinflation due to that risk, due to the quantitative easing, and we want to show you that video right now. And afterwards we will show you exactly this chart. We really want to show you to understand the purpose of that episode. It started in 2009, the beginning of Bitcoin, this animation here. This is the inflation rate. Look, Venezuela coming already. But you have many countries, third and second world countries. What does that mean to Bitcoin? Guys, it's crazy. You cannot make this up, really. And it starts there in the third and second world countries. And it will expand to the more wealthier second world countries. Look at that. And first world countries as well. Let the US be the last country being hit by that effect, but it is a high probability actually as this goes further. So we want to get into the next chart. And this one, shout out to the moon. Actually for that video, shout out to the rankings. They have edited that. And this one, shout out to the moon. We covered that chart here like a few weeks back, and afterwards on the same website he covered that charts, but it's different charts, so shout out to you. It was very interesting because what you can see right here, remember, just circle back, that's the monetary supply in the US. What you can see right here is the interest rate. And what's actually the different instruments of the interest rate. And stay here, guys, it can be a bit dry, but it will make perfect sense for you in the end. The different instruments of the central banks are obviously increasing the money supply and also increasing or decreasing the interest rates. So what they are doing with the money supply, you already know it. What are they doing with the interest rate? Ever since the Bretton Woods system, the pegging to the gold standard was broken, you saw that they were increasing the money supply and in the same time decreasing the interest rate. Because in the end of the day, when you get your paycheck, what can you do? You can save your money, or you can spend it on consumption or on investment goods. So they wanted, obviously, the people not to spend, but more to invest and more to consume to really boost the economy, obviously. And that worked really, really well. But now they have shot out all their power and they really gave away their second power of the interest rate. And if we are just circling back, before the last financial crisis, we had really cheap money and the people were borrowing very cheap money, investing into assets like houses, like watches, real estate, and so on. And you had that big peak. And then, due to the increasing of the interest rates, and then the need of the refinancing of the debt of those real estates, you had that big crash because the people were not able to pay higher interest rates as they had to refinance their debt, and we had a huge crash. And now we had a huge long time period of very, very cheap money, and the people were borrowing more and more, and we have more and more debt, not only from the government side, as Alan Greenspan was saying it, we can always pay it back, but also from the private sector side and from the company side. And now we can see that the interest rates are increasing again. Just think about it. What will happen when they will come to refinancing their debt? They will not be able to pay that back. And this is only one factor we want to talk about with you guys, because we really have the danger not only of inflation, but because we have inflation and hyperinflation already at so many second and third world countries, but also this will expand to the first world countries. And what does that actually mean? Because when you buy one Bitcoin right now, today, for $4,000, the question is not what is the US dollar value in 10 years' time. The question is what set amount of basket of services and products can you buy with that amount of Bitcoin? And what kind of services, commodities, and stuff can you buy with $4,000 in 10 years' time? Due to that charts, due to the money supply increase, you will not be able to buy as much with $4,000 like in 10 years. And now we have to ask ourselves the question, is the same thing possible with Bitcoin? Because the biggest point is you cannot increase the total supply, the maximum supply of Bitcoin. You cannot increase that. And coming to that, this concludes everything we said before, with keeping the monetary inflation in consideration, and also the fact that Bitcoin cannot be inflated, but everything else can kind of be inflated. Keeping everything of that in mind, we have to look at the implied market cap of Bitcoin in the year 2050. And can you think of any scenario of Bitcoin being only valued at 85 billion? Because if the prices stay as they are today, 4,100, close to 4,100 US dollar per Bitcoin, the market cap will be close to 90 billion in the year of 2050. And just imagine, we will see an economic meltdown or maybe even a hyperinflation. The alternative investment to Bitcoin will always be fiat currencies. And with the fiat currencies being inflated like crazy, can you think of any scenario of Bitcoin not going to explode, since you cannot hack it? I mean, you can hack computers, and let's not talk about quantum computers. And but you cannot increase the maximum supply, and you cannot cheat the system through the decentralization and the huge hash power. So can you think of any scenario of Bitcoin not being set up to explode, with all those network effects being set right now, with all those fundamentals increasing day by day, with the Lightning Network and so on? If you cannot think about that, why are you looking at all those short-term FUD or FOMOs? If you know the outcome, if you already know what will happen in 2050, those will not be this kind of numbers, because we cannot sustain this really sick and ill society with quantitative easing for such a long time frame. If you already know the outcome, why are you so short-term sided and watching at those short-term news? We already know the outcome. Bitcoin is set up to explode due to that thing here. This history is just repeating itself. We had this long period, even a longer period, of not even cheap money, but free money and asset inflation, and now we have the money getting more expensive, and whenever it comes to refinancing that debt, the currency, but not only the economies, but also the different currencies, maybe US dollar will be in the end, will come under huge pressure. And this will definitely, in the long term, when nothing exogenous happens, will definitely be very beneficial for Bitcoin. So let us know, guys, in the comment section down below, what do you think about that theory? What do you think about our theory of the economic meltdown being the biggest driver of the next, not only of the next bull market, but of the Bitcoin price development in the long term, even though the US dollar price might be, in the worst case scenario, not even an important metric to look at? Let us know in the comment section down below. And also, if you think that was valuable, make sure you leave a like and also subscribe to our channel, because we will be releasing very much content in the next few weeks and months. Da Vinci will be like 2 times a week on our show, so make sure you subscribe. And now, coming to the end, we had the sponsor of our episode in the beginning, and now we want to come to the sponsor of that channel, resistance.io, and we had already a video with them. So thank you so much for sponsoring us, guys. Thank you so much for sponsoring our channel still. And as many of you guys know, Anthony is a friend of ours, and we just recently checked out their project as well, talked to Anthony, so we really felt about talking like that just for a short amount of time, because they were also really supporting us. And this is obviously no review, because we do not do sponsored reviews, but this is some kind of an opinion. So we checked out the wallet and the decentralized exchange in Davos, and not talking about investable, not investable, or review kind of things. The wallet and the exchange itself is really one of a kind. The coding in there is one of a kind. This is working like crazy. We can really see that these amazing individuals have been working like crazy on that product, and what it comes down to in the end, in the long term, is obviously the fundamentals. So thank you so much for, improving that space. If you really will be able to make privacy protected trades with ZK snark protection on their amazing decentralized exchange, I mean, this is not all too bad. And what really catched our eyeballs was that they are finding themselves not only with a private sale, but also with an IEO. And just keep in mind, we are not talking about investing, not investing, but the fact that it is an IEO was kind of interesting. Now the question, what kind of IEO? I mean, they have strong partners, TLDR, BitGosu, and so on. So we actually do not know what this exchange might be. They have a Huobi partnership, and they also have strong relations to other exchanges. So no one knows what that exchange might be, but it is kind of interesting. And we wanted to say thank you again for sponsoring our channel, guys. So yeah, that being said, we want to wrap up today's episode. We hope you found that interesting. It was a little bit differently. We talked about economic issues, about macroeconomic issues, not so much about crypto, but indirectly that was really much connected to crypto, especially in the long term. So if that didn't give you a positive mood for the long-term future of Bitcoin, we cannot help you any further, guys. So that being said, make sure you leave a like, make sure you leave your thoughts in the comment section down below, and we will see each other in the next episode of MMCrypto. We will leave the link of that Alan Greenspan quote down below, because this was hilarious. It was mind-blowing to say there is zero default risk. It's crazy, guys. So that being said, again, guys, thank you so much for watching. We will see each other at the next MMCrypto episode very soon. And as always, guys, bye-bye.